Well, a warm welcome everyone. My name's Carty from Solace Financial, and welcome to our May 2025 Solace Investment and Economic Snapshot, your monthly guide to what's happening across markets, policy and planning. There's a lot of movements this month across the globe and at home, so let's dive right in. We'll start with the United States, where the Trump administration signaled a softer diplomatic tone, engaging in bilateral trade talks and securing a temporary tariff truce with China. This provided markets with a shot of confidence. Equities rebounded strongly, with the S&P 500 rising 6.3% in May and the Nasdaq surging 9.2%. But it wasn't all smooth sailing. The US still maintained a protectionist stance, raising steel and aluminium tariffs, and a court ruling declared Trump's controversial liberation tariffs unlawful, putting the legality of the measures under serious doubt. Meanwhile, the US Fed held rate cuts steady due to uncertainty, while back home the Reserve Bank of Australia cut the cash rate to 3.85%, aiming to support domestic growth amid softening consumer sentiment. The ASX 200 posted a solid 4.2% gain in May. Financials led the charge, with the Commonwealth Bank alone up 5.6%, contributing significantly to year-to-date returns. The real star of the month is the technology sector, which jumped nearly 20% thanks to a global surge in growth stocks. On the commodity front, gold dipped slightly, while oil prices continued to slide, with Brent crude down to $61 a barrel due to oversupply fears. The US bond yield climbed, reacting to a controversial new US budget bill expected to add over $2.4 trillion in debt. Australia's bond yield also drifted higher, but were more stable, reflecting a more positive financial outlook and expectations of further RBA cuts. Now let's look into key updates from the government and regulators. Released on the 29th of May, new online tools are now available to help estimate aged care costs under both current and upcoming rules starting on the 1st of July 2025. This includes tools for supported home fee estimations and aged care home fee estimations. From the 28th of May, those with retirement phase pensions and unused cap space will benefit from a total balance cap indexation to $2 million. Updates to personal caps will be viewable from the 11th of July in ATO online services. On the 26th of May, the ATO launched its Ready for Business campaign, providing GST, pay-as-you-go and superannuation education tools for small new business owners. The goal is to help them plan and avoid future tax time surprises. Starting on the 1st of July 2025, the government will pay super on paid parental leave. It'll be a lump sum taxed at 15% and counted towards the concessional contribution cap, a step forward in closing the gender super gap. The ATO has flagged a rise in fake websites spreading misinformation about superannuation preservation age. A reminder that preservation age remains at 60 for those born from the 1st of July 1964. If in doubt, stick to the official sources. In a press conference on the 14th of May, the Treasurer reaffirmed the government's plan to tax earnings in super balances over $3 million, a policy shelved during the election but is now back on the agenda. The ATO has also rolled out a new centralised resource for self-managed super fund auditors. It's not just for auditors. Advisors and trustees can also use the information to get a better understanding of the documentation and compliance expectations. Small businesses with turnover under $10 million may gain access to the $20,000 instant asset write-off for this financial year, a timely benefit if you're planning on upgrading equipment. Despite trade tensions, legal uncertainties, and a shifting monetary policy, global equity markets rebounded strongly in May. Australia's economy remains resilient, supported by rate cuts and a strong financial sector. From aged care to super reforms to small business support, there's a lot happening across the financial landscape. As always, staying diversified and informed is a key component to maintaining wealth through this evolving environment. Until next time, we'll be watching.